Good afternoon, everybody. Welcome to your Friday edition, the weekend wrap-up of TraderMerlin show. What a wild week it was, finishing for most of the major market indexes, at least for the day, to the upside, and a pretty positive week for our top 7 things we like to look at. Normally that's going to be the S&P, the Nasdaq, the Russell. We've got gold, we have crude oil, and of course Bitcoin. So the top 6, because I took the 10-year out of that one, all of which showing some amazing gains out there today. So hello, Les. You made it back to first place. Good to have you with us. Cheers to everybody. I am drinking a little whiskey today. It was a great session. At least Friday was an exclamation point for a very good week, especially because of the crypto stuff. So hello, Les. David, I got your message as well. I'll be answering a couple of those questions today. Pepper, you sent in questions as well. For those of you who might be new to the program, you just email me at TraderMerlin@gmail.com. That's the easiest way for you to get your questions answered, and I'm happy to get as many as I can. Johan, Jim, good to see you as well. John, Todd, Mario. We've got Thomasina in the house again. Big Ev, of course, as usual. Catherine with us. We got Tom. And Tom, I got your message. I was actually at the Irvine Center today. It's so weird. I don't mind doing these types of things, but I get a little bit, I don't know. I get like shy and uncomfortable sometimes being the celebrity. I like going in and teaching. But when it's this as a celebrity type of thing, I hate it. It drives me absolutely crazy. So I'll come in next time. Let me know when you're in center next time, and I'll gladly come in there. And then I've got my NorCal brethren, Mr. Collins, joining us today. Good to see you, Chris. And by the way, that was not a swing last night for the final out of that Dodgers-Giants game. That was a bogus call. Anyway, congratulations to the Dodgers. I still hate your baseball team. Giants all the way, baby. All right, good to see you, Chef E. Mimi, as well. Let's get rolling. Ooh, it's Slaughterhouse today, by the way, is the whiskey I'm drinking. Nice, very nice. All right, so here's what we're going to talk about. Obviously, the trading week wrap-up. We have a lot to talk about. I have a whole slew of listener questions that I'll get into on extremely broad and diversified topics. Actually, a really good one from Pepper talking about psychology. So I'll go through some of the psychological aspects. I actually had a really good session with Kayla Christine the other day. For those who might not know, Kayla does a session called Women in Trading and Investing. It's the Witty podcast. And, of course, I am not a female. I might seem a bit feminine with the shirts I'm wearing, but I'm definitely, I'm a man. It's okay. But I was on there doing 2 sessions with her, one talking about the infrastructure bill, and another one really about the psychological differences between men and women when it comes to trading, and it's so much about psychology. So hopefully those podcasts will be out soon. You guys can check that one out. All right, let's see. Let's start off with what happened this week. Now, obviously, we're going to end with the exclamation point, which is crypto, which is just ripping right now. I'm ecstatic about my crypto portfolio. It's funny because yesterday I was talking about Polkadot, which is up 20%. Well, now you've got Bitcoin's up 8% today. You've got Polkadot again, another 8%. You've got things like Litecoin up 7%. I mean, there's some big gainers out there across the board, which we'll address. But I want to start with the major indexes. And I'm doing something a little bit different. As you can see here, I'm using a weekly chart just to get a perspective of how big those gains were. Now, we had that pretty nice sell-off last week with the Nasdaq 100. You can see that nice bottoming tail, which actually broke down below a demand zone for me. And then, call it a bear trap. Got people short, including myself, right? Got it short and then just ripped back up. And today, finishing for the highs of the week. That is a very positive sign for the markets going, or at least for the Nasdaq going forward, finishing on a real high note. I actually thought we might sell off a little bit near the end today just to clear the slate for, any news announcements that come out over the weekend. But Nasdaq performing extremely well, up 0.67% for the day. Here's your S&P. Again, similar picture, closing just slightly off the highs of the day, but that trend is still beautiful, still moving to the upside. It would not surprise me to see this thing challenge those all-time highs next week, given more earnings announcements, which we'll talk about as we progress. Dow Jones, sure, let's bring up the Dow. Dow is right now entering that supply zone, which, as you can see, just goes back about 2 weeks. But you got that overhead supply zone, which could be a little bit of resistance, but let's be honest. Look at that price chart. Doesn't look like this thing's really having any challenge making new highs. So I expect most of these indexes to keep on trucking and breaking new highs, especially for something like the Dow. GD, the podcast is called Women in Trading and Investing with Kayla Christine. I think it might be on in Online Trading Academy's YouTube page. I think you might be able to see them there. Not exactly sure where they're at, but she interviews a lot of women in trading and investing, from brokers and analysts to just full-time traders on their own. So it's pretty cool. All right, let's go to Russell, which is the weakest of the week. And again, nothing new here, right? Song remains the same. This is a weekly. We've been stuck in that for almost a year. Just pretty sideways. Yes, it was up for the week, but there's no great trend there at all. Now, here's where the great trend is. 1.4% gain for crude oil again for the day. And then you notice that weekly candle. It's been 6 weeks in a row of nothing but higher highs for crude oil. And now all of a sudden you broke that high that we saw right around July 1st. Great sign for the trend. The big question for me now becomes, where's crude oil going to go? And I'm sure many of you are trading crude oil, so I guess I would ask you, where do you think crude oil is going to go? And if we look back, you have to go all the way back into 2014 to find any level that could be interesting. So I'm gonna map out, or at least do a yellow box for you guys on this piece right here. Right. So I'm just gonna do this. So when I zoom in and scroll back, I'll know what to look for, right? I'll know where current price is, which is right. It actually has a line already dropped, so let me just get out of that. And let's zoom in here. Oh, get out of there, Merlin. It's the whiskey already, making me draw weird lines. So you can see where we are right now on this weekly. There's really nothing. We're at 82.48 right now on crude oil. And the next area of supply looks to be right around 92 bucks, 92, 93, somewhere in that ballpark. So you've got quite a ways to go. And ultimately, you have that 105 mark, which was actually brought out by a couple of guests. I can't remember who it was. I should really be creating a journal of which guest calls what levels. But I remember one of them, it might have been John Rowland a while back, talking about crude oil hitting 105 bucks, because that's that major area that started this weekly sell-off that went from about 110 all the way down to 43 bucks. So right now, crude oil is breaking through the most recent highs. You can see that right here. That's obviously a very good sign. And I told you guys that I was actually bearish in this blue box, and I said as soon as it gets above this, I'm bullish again, and here we are, bullish on crude oil, and it looks like to me that there's really not much to stop crude oil. It is the darling, at least I'll call it the number 2 for the week here with regards to gains. All right, let's look at gold. So I have the chart of gold here. This is a weekly, staying within that downtrend. It was looking pretty positive today. Gave back a lot of those gains near the end of the session, but all in all for the week, gold was positive. Not a huge gain, right? Nothing. Was it Sam Evans? How was Sam Evans called? Thanks, Mario. Sam Evans. I got to call him up and get him back on the show. I know he's probably he's out there trading actively, and he's not teaching. So let's see if we can get him on the show. But this was of interest to me because obviously I was in silver. I'll walk you through what happened to me with silver. But with regards to gold, I'm still not overly bullish on it. I know Brendan's probably hiding here somewhere, although he's usually vocal when he's in the room today. But long term, yeah, buy gold. But right now, I don't think you're getting the signs. Again, we are seeing this descending triangle. I'll stretch that line out. You could go through the tails, you can go through the bodies. Either way, you've got this nice downtrend going here with gold, and I think that will probably persist in more consolidation until it doesn't, right? Everything works until it doesn't. If we get the breakout above that line, cool, go long. Or if we get a breakout below that, go short. Is the gold candle a shooting star? Good question, Les. Technically, you would say yes, right? So for me, a shooting star has to be something that's after an uptrend. And if you notice, the past 3 weeks has been an uptrend, albeit it's a small uptrend, right? It just slowly traversed up, but it did bounce off this demand zone that goes back into March 1st of 2021. Hit that, bounced off of it, and you saw a nice little move up, but just didn't have legs. So now you do have what I would call it a shooting star, albeit it's not a great one, right? It's really not not great for me. And the reason being, there wasn't a ton of emotion in this move up. So let's take this candle that you're talking about right now, this green one right on the hard red edge of this chart. If I took that candle and put it right here on this peak of June 1st of 2021, where my mouse is, I'd love it. Oh, I would love that one, right? Because you can tell all this gains, all the money that would have been gained in this rally from March until June, a lot of those people are going to start to take profits. But when you have a small move like this, it's not to say that this isn't a shooting star or it's not going to follow through or work. It just doesn't have it's like I'm grading them, right? It's kind of like you line up, quality baseball cards, right? I used to be a baseball card collector, and you could have 10 different cards of the exact same card, but some are going to have, kind of rubbed corners. The picture might be slightly blurry, or it's just offset a little bit. There's different grades and qualities of baseball cards, just like there are different grades of candles. And for me, this one is not a great shooting star. But your identification process was right, Les. I would call that a shooting star, but not a good quality one. I probably wouldn't be looking to make trades off that on Monday morning. All right, hold on gold, buy more Bitcoin. I agree. I'm right there with you. And we'll talk more about that. There's certainly a lot of newsworthy stuff for Bitcoin. And just because you mentioned that, it is time for a sip of Slaughterhouse Whiskey. If only I could get a sponsorship from a whiskey company. Wouldn't that be nice? I'd have a real problem then. All right, so we've got one left. And this, to me, is where the excitement really has been this week. It is heating up, guys. It is not only Bitcoin season, it's altcoin season. You talked about those, 6 weekly up candles in a row for gold. Hey, that's great and all, but the percentage move for Bitcoin in that same period of time is far superior in only 3 candles, right? 3 gigantic weeks for Bitcoin. It was trading down as low as 39,000. And today, right now, we're at 63,180. And according to the Bitcoin futures, the all-time high for Bitcoin is 65,520. We might get there by the time I go and have my drink out of the restaurant or bar tonight, the way this thing has been moving. Beautiful moves. 8.57% gain today alone for Bitcoin. It has just been a beautiful run. I know many of you are still holding on to your Bitcoin. I'll just show you the gain here over that period of time. You've seen a 58% move in Bitcoin in 4 days. Or sorry, this is weekly. I'm sorry. I was like, wait a minute, it didn't move that much. Let's go to the daily. But 58% in 3 weeks is pretty impressive. We could even shrink that down a little bit and go here. In the last 11 days, it's 55%. So all in all, very good for those of you who are holding crypto. And again, I will not be selling my Bitcoin. I will be buying more and actually using my Bitcoin credit card as much as possible so I can gain there as well. So that's your main market rundown. If there's something that you guys want me to analyze or look at that you think might be noteworthy, go ahead and type it into chat. We looked at natural gas a few times this week, so we probably won't look at that one. But if there's something else you want me to sprinkle on, just let me know. I'm going to go to some listener questions here that were sent in to TraderMerlin@gmail.com. Get those ones out of the way so we can move forward there. Big Eb says, Bitcoin will break all-time highs this weekend with the news on ETFs coming up. Well, why don't I just go right in that topic? You can be my Big Eb. You get to be my Eb McMahon. Yes, for all my Johnny Carson fans out there, we've now got Eb McMahon, E.B. McMahon. I love it. Let's talk about that for a little bit here. So you have something very interesting. The first official Bitcoin ETF will be live as of Monday morning. And, that one, it's ProShares. So ProShares is a very established, well-known ETF firm. Not only singles ETFs, but doubles and triples and leverage ETFs, etc. So that's very important. That's the ProShares. Now, it's not a total green light, but right now the optimism is that it will be green lighted, and I think that's why we've seen Bitcoin just really start to surge, because finally you're having an equity traded Bitcoin product. Now, here's the catch. The ProShares ETF for Bitcoin will be futures. I know, it's not what we want to see. As someone who's passionate about crypto, it's not what we want to see. I know, Margaret, I'm definitely dating myself. Old Johnny Carson. I was a kid for Johnny Carson, but let's be honest, he probably was one of the best hosts ever. And Johnny and Rodney Dangerfield and Robin Williams are the 2 best guests on those types of shows ever, hands down. Anyway, we could go off on a whole nother topic with regards to that. So with regards to this Bitcoin ETF, I'm excited. It should go into effect Monday morning. And you're asking, well, what do you mean should? Because the SEC has not officially said yay or nay. So they're letting it happen at this point. They could put the kibosh on it. I believe, from my understanding, they have until midnight going into Sunday night, going into Monday morning at midnight. They have until that point in time to say no to this ETF going live. If it does go live, I think you'll see a lot of fanfare and big moves in Bitcoin this upcoming week once that official Bitcoin ETF goes live, but it's with futures, not physical backed security. To me, that's an important piece to remember. Now, there was a question. I agree, Margaret. He was absolutely the gold standard. What was the one? He said to Arnold Palmer's wife once, and he got sued for this. It's one of the funniest comments ever. He asked Arnold Palmer's wife, this is Johnny Carson's show, he says, when the night before a big tournament, do you do anything for good luck for Arnie, because he's just such a king at golf. there's got to be some routine. She goes, I kiss his balls. And Johnny very quickly goes, well, I bet that makes his putter flutter. And it was like an innocent comment that she made, not thinking that Johnny Carson would take it that way. And I believe she actually filed a lawsuit against Johnny Carson for that one, which was pretty damn funny. Anyway, great comment, by the way. So, do we know the opening value? Its opening value? No, but my guess, GD, I'd have to look at the mechanics. My guess is it's going to be a percentage or the price of Bitcoin. My guess is it probably won't be, $60,000. My guess is it will probably be maybe 63, right? So $63 per share of this one. It's just a divisor. So, it'd be 1/100th of a Bitcoin. Or sorry, 1/1000th of a Bitcoin. So I think that's how they'll do it. But we'll have to wait and see. Certainly we'll be talking about it on the show on Monday. Now, that said, there was a question. Let me make sure I get to this question as well. David, who's with us today, sent this question. And he says, what was the ETF you talked about that hold Bitcoin and can be used as a surrogate for registered accounts? Well, it's not necessarily that it's a Bitcoin ETF. What they're doing, and it's the name of that one is... it's the Volt Equities ETF, which was green-lighted by the SEC. So this one will be going live soon. And the Volt Equity ETF, all it does is says, we are going to buy and put companies in this exchange-traded fund that own on their balance sheet Bitcoin. So MicroStrategy comes to mind, Square comes to mind, PayPal comes to mind, Twitter comes to mind, what about... Tesla, right? These all have physical Bitcoin on their balance sheets, and that's all that ETF does, which is, it's kind of cool, but, is it really a Bitcoin play? There's only one company out there that I would say is a Bitcoin play by buying its shares, and that's MicroStrategy, right? MicroStrategy is pretty much Bitcoin. They have so much Bitcoin. I think it's $4 or $5 billion worth of Bitcoin right now. And you can tell by the price chart, this thing does actually mirror to some extent Bitcoin. So this is the only one to me that's really a proxy for it. That said, there's a lot of other companies that have a small amount of Bitcoin on their balance sheets. There is GBTC, but again, I don't touch it. I believe GBTC is broken. GBTC is not an exchange-traded fund. GBTC is a trust, which has very different execution methodology and filing that needs to be done. So it's not as tradable as something like a Bitcoin ETF. It has lag time and inherent trading issues internally, which has, in my opinion, just made it not worth buying personally. Again, a lot of people think it's a proxy to buy Bitcoin because the trust physically has Bitcoin in it. However, again, it's the reporting and sales. So you have this huge premium or discount that you're paying by buying GBTC. We need to see that go away, right? It needs to really just be this is the price of Bitcoin proxy is what it should be. But so GBTC I wouldn't recommend, but that's just me personally. Let's see. Oh, yes, Believable Direction. Yeah. Oh, you're going to make me go back and go on a YouTube bender and watch a bunch of Johnny Carson old classic stuff. Great stuff. Yes, the Zsa Zsa Gabor one with the cat. Whee, lordy. So is that an exchange-traded note? No, GD. It will be an exchange-traded fund, and the fund will have futures in it. So for those that don't know, an ETF and an ETN are very different. An exchange-traded fund is a basket of securities that physically owns what it says it has. For example, in this case, it's going to be Bitcoin futures. So this fund will own physical Bitcoin futures. It'll be active in the market buying and selling Bitcoin futures. An exchange-traded note is basically saying, it's like a promissory note that, in here we have some of this stuff, but they don't actually have it. So if something were to happen and that the ETN was to explode, it doesn't have any assets. So in theory, you don't get paid out if that thing implodes. If it's an exchange-traded fund and all hell breaks loose and the fund implodes, it still has assets that can be sold off to pay off its creditors. So I have made it a point over the years personally to not use ETNs or derivative products like ETPs. Excuse me. But that's just my own weird, quirky, kind of fearful, not trusting anybody mentality that I live off in the markets is that one. Let's see, what else do I got? And these crypto ETFs will track better than GBTC, yes. Now, the only question there, Tom, is how are they doing the futures products, right? It'll probably be something like USO, right? USO it's simply futures products, right? They're using futures, and it tracks to some extent crude oil, but there is a difference because what you have is the cost to roll over all these futures contracts, and of course that cost gets bundled into the price. So you'll see a slight difference in tracking, but I think it will be way better than GBTC. I'm honestly surprised that GBTC doesn't have the clout to go to the SEC and be like, hey, look, we've got a Bitcoin trust and it's done fine. Why can't we just have a Bitcoin ETF, right? We want to do it anyway. We've filled all the paperwork out. They're trying to get ETFs for everyone that's physically backed. Litecoin, Ethereum, Ripple, Polkadot. They're trying to get everyone, but the SEC is just playing stubborn right now. The good news is what's going to happen on Monday with the ProShares. It's called the ProShares Bitcoin Strategy ETF. When that rolls out, that's the door has been opened, right? And I think the SEC will wait a couple of months and go, okay, how did this do? How did this perform? Were there colossal losses, massive gains? Were there systemic failures? Were there problems with the futures contracts? And I think once they do that, then they'll open the door to several others. And fingers crossed, it will be for physical backed Bitcoin ETFs or whatever cryptocurrency it is, but physically backed with the real currency. When that happens, then I think you see the next leg up in a big way with these cryptocurrencies, especially the ones that are being built into ETFs. And ideally for many of you, I think what would be great is that we get to the point that there's actually portfolios. And, if I had capital and I had some big backers, I would build 3 or 4 portfolios that represented different segments of the cryptocurrency markets. For example, I could do an Oracle segment, I could do smart contract segment, I could do decentralized exchange or DeFi segment. So you would buy this ETF, and inside there you had 30, 40, 50 different physical cryptocurrencies. So now you don't have to go to Kraken or Coinbase or Binance to buy everything. You could, in theory, buy a share of an ETF. Of course, you're going to pay a fee, and you have that pre-built diversified portfolio. That would be pretty cool for anybody looking for long-term investments, but I think that's a year or so down the road. But we're getting there. We're getting there. So there you go, David. You asked about the ETF that you can hold Bitcoin and be used as a surrogate for registered accounts. That one was called the Volts ETF, which is just ETF companies that hold Bitcoin. You have the one rolling out on Monday, which will be the ProShares, which you can probably hold in your funds as well, and that will be futures-based. Do you think a company like Vanguard will ever offer ETFs in the crypto world? Hell yeah, right? Here's the thing. If you look at somebody like Jamie Dimon of JP Morgan, right? Jamie Dimon has been on record in 2016. Bitcoin's a scam. 2017, so Bitcoin's a fraud. 2018, it's not worth anything. 2019, it's garbage. 2020, it's trash. You should stay away from it. 2021, I think it's a fraud again. Yet they are creating products within JP Morgan that are based off of Bitcoin and digital assets. So I think the general concept is this. If I'm the CEO of an investment firm, let's say I'm the CEO of Vanguard, I can look at this market segment and say, I don't believe it. I think it's a scam. I think it's a fraud. But if my customers are demanding it, and I'm looking out at the ecosystem and seeing JP Morgan's got one, Goldman Sachs has got one, Bank of America's got one, Fidelity's got one. If I don't have a product, I could lose customers, right? If I don't have Bitcoin and I'm Vanguard and my customers want it, they might go across the street to Fidelity, who is going to have their product, right? So I believe that every major financial firm will have their own products. That's just my personal take on it. I just think that it's in their own best interest to have one. Even if they believe in cryptos or not, they'll lose customers and business. So what's more important, your belief system or losing your core business of customers? I think they'll all have it. Sam says, can't wait for the XXX ProShares on Bitcoin. As if Bitcoin doesn't move enough in a day. I mean, can you imagine today'd be a 24% up day if you had triple long, and it'd be a 24% down day if you had triple short. So, that's a double-edged sword. While I love the triples, they're great for day trading and things like that. There is a decay problem, and you could actually lose money over time by staying in a triple leverage long. Exactly, Batista. JP Morgan has a crypto desk, yet Jamie Dimon says it's a fraud. It's not worth anything. Wait. Hello, Pot. Calling Kettle Black online too. What else do we have? All right. Is an ETF for a futures contract for Bitcoin. It's an ETF that holds futures contracts. So basically right now you have the futures contract on the CME, which is, I believe it's 5 Bitcoin per contract, which prices out most of the retail investors, right? GBTC, I believe is 5 Bitcoin is in one contract. So the Bitcoin ETF will be buying these futures products from the CME and keeping them in a fund. That's how it's going to work. Really what it does is it allows the retail investor, because let's be honest, most of the retail investors, they just buy stocks at E-Trade or Ameritrade. They don't have a futures account or understand futures. So they will just be buying a futures product through an exchange-traded fund. Is it a good idea to just chart Bitcoin futures and trade the ETF off of that? Yep, I believe so. I mean, if this new ETF, this ProShares Bitcoin Strategy ETF, if that is in fact just Bitcoin futures, it should track almost 100% exactly to the Bitcoin futures chart, right? So yes, definitely be tracking that one, and we'll incorporate that into the show. Starting Monday, if the SEC doesn't put the kibosh on it. Who knows, Big Eb? I've said this many times at presentations over the years that a lot of times when you don't understand something and you can't quite figure it out, doesn't make sense to you, it's easy to call it a scam. It's easy to call it a fraud. I mean, I think back to my personal experiences when I didn't understand something, like, oh, that thing's stupid, stay away from it. It's junk, it's trash, it's a scam. Well, I just didn't understand it. And then as soon as you start to research and dig in, you're like, oh, wow, okay. I can see what it is. I get it. And then all of a sudden you might migrate from a total skeptic to a fanboy, as I am with crypto. Anyway, let's see. What other questions do I have? I only had 3 that came in last night. And let's see, number 2. Let me modify the screen just a little bit here because it took up too much. This is a long one, but I want to do this one for Pepper because it's very psychological, and I am a huge fan of psychology. So here it is. Let me bring it up for you. All right, so we'll dive into psychology. Pepper, good to have you with us today. She says, I struggle with 2 wearing mindsets. Don't overtrade versus don't be scared to trade. If I have 10 setups that look good, part of me says, if you take them all, you'll be overtrading. And the other part of me says, if you just pick one, you're being scared to trade. How do you handle these 2 impulses? So let me start with those 2, and then I'll go to the second part of the question here. It's actually pretty simple. Part of the process, and Pepper, I do believe you are an online trading academy. Medic, you're funny. Part of the process at Online Trading Academy is using odds enhancers, right? And there's an odds enhancers worksheet. There is, a list of them and call them grading criteria. So what I would recommend, let's say you do have 10 different setups. It doesn't mean you have to take them all. Now, I know traders in the past who would, if they found 10 great setups, they'd take all of them. It's not that you're over trading, you found 10 great setups. If you're concerned that you're over trading, then maybe you say, okay, I'm going to pick the best 3 or 2 or whatever number you feel makes you feel comfortable with that doesn't make you an over trader, if that makes any sense. So how do you do that? You analyze the levels, right? You look at things like the trend, you look at the structure of the levels, you look at the zones and see where we are in the curve. You run through your odds enhancers and objectively fill out your odds enhancer score, right? All of a sudden you're like, ooh, I've got a real high odds enhancer score. And then put that trade at the top of your list. Let's say Microsoft has the best setup with odds enhancers, right? It gives you the highest score. But then you look at your other 9 setups and a lot of them are real weak. Well, then take the Microsoft one. It doesn't mean that one that scored very high is guaranteed to win. It's just you're taking little pieces of probability and putting it in your favor. So if that's the case, then just take one, whatever you're comfortable with. To me, over trading is doing like 200 trades a day. What I would do is this. I would give yourself, the analogy I like to use, which is perfect for me, especially after I have another sip of whiskey. The analogy for me goes back to my trading days back in the old trading floor. I was shooting at anything that moved. I didn't have a trade plan. I was like, oh, it's moving. Boom, jumped on it. Done. Now, as I've gotten older, you have to be much more controlled about it. So instead of me going from the machine gun approach, which was I'm just spraying trades all over the place, who cares? Some of them are going to make money, some are going to lose, and hopefully have money at the end of the day. You have a 6-shooter now. It's Wild West action, right? So you can't shoot at everything because you might miss the next great opportunity. So give yourself a number of trades per day that you're comfortable with. Now, for all of you that are trading equities, you pretty much don't have to worry about commissions anymore. So over trading was a problem because the amount I generated in commissions. I mean, I was well over $10,000 a month at one point in commission, just paid. It's crazy. So if let's say you have a 6-shooter, that means you have 6 trades that you can make today or per week or whatever you decide to create that threshold. So if it's 6 trades per day, map out your 10, look at them all and say, here's the top 6 that I'm going to be taking. And forget about the other ones. Don't look at them because you'll second guess yourself. Just say, I feel these are going to be the best. Or what you could do is on all 10 of those setups, you map out the trade and you put in a bracket order. I've got my entry, stop loss, my price target, whether it's long or short. Put all those 3 variables in the system and then just go golf. Go do something else. Don't even look at your computer. As long as you have the capital to make those 10 trades, then make all 10. Because what happens if you get in a situation where you put all 10 of those trades in a set and forget mindset, right? For those that don't know, set and forget simply means you put in your entry, stop loss, and price target, or targets if you want to do multiple targets. You put that in the computer and then you turn it off and you go away. The worst thing that could happen is your trade gets filled and it stops you out because you already have the stop in there. So do the bracket order for all 10 setups. And then you won't feel like you're scared to trade, because if the trade happens, it happens. And if it doesn't, it doesn't, right? It shouldn't be this, oh, I'm fearful to make a trade, or I feel like I'm over trading. If you found good setups, over trading should not be an issue. If you found good setups, you should take those good setups and let the trade do what it's supposed to do. If you were wrong, hey, let's analyze it after the fact and evaluate it, right? That's the easiest thing to do. So, Pepper, that's the basic overview. I hope that helps a little bit. Let me go to the second part of your question here. The above is as concise as I can make it, but you're throwing high syllable words in here. To elucidate, whew, man, that's a tough one. Elucidate the point. When I take more than 2 or 3 trades a day, I start to get the nagging feeling that I'm over trading. And immediately I hear inside my own head, don't be afraid to trade. I guess a better question is, when does trading a lot cross the line into over trading? And when does waiting for the best setups cross the line into being too afraid? So, great. I actually love it. I think it's a great question. I think many of the viewers out here can empathize with you and know that they are kind of in that same situation. So what I would encourage you to do is don't think that I'm over trading. I mean, heck, if you have the capital to make 10 trades or 20 trades at a time, I don't see a problem with doing that. I mean, ideally, you'd want to maybe whittle that down to which ones are the best, because they're probably not all going to be great. But you know what? I've had setups that are perfect. Like, you look at this and you go, man, this is the perfect trade setup. And you make that trade and it just stops you out. And you're like, wow, that was weird. And I've also had ones where you go, man, it's an okay setup. Let me just try it. And next thing you know, you're rewarded. It just blows through your targets, and all of a sudden you're in a 10x, 15x winner. You're like, wow, I did not expect that to happen, but damn, that's cool. How do you know, right? How do you know which one is going to work? You don't. Obviously, the analysis process is key in helping you say, I feel like these are going to perform well based off my analysis. But I actually like having multiple trades. I like having multiple trades open. Why? Because one might just blow through my target, and all of a sudden I am scaling out at much, much higher profit points than I would have normally. And I didn't expect it to happen. You know, the most important part, as I've said many times for all of you, is it's not about your gains. It's really about the losses. So as long as you keep those losses locked in, don't worry about overtrading, right? Don't worry about it. Don't be scared to take the trade. Take the trade. Just have to know in your mind that if I make this trade, I'm losing this much money. If at a worst case scenario, I lose this much. If that's not good for you, you have 2 choices. Number 1 is don't take the trade. Just forget it. Or number 2 is scale back your share size till your stop loss is appropriate. So let's say, for example, you know that your stop loss for the day for your entire portfolio is $500 for the day, right? That's your maximum downside. Well, if you're taking 2 trades, you might want to look at that and say, I'll do $250 per trade. If you're doing 5 trades, maybe it's $100 per trade. So in order to do that, you're gonna have to scale down your share size to make that happen. You don't want to take a stop loss and shrink your stop loss just to make the loss appropriate, right? You've defined your stop loss because of the demand zone or the supply zone. So you have to go back through and adjust how much you're buying times the stop loss to get to your ultimate loss, if that makes sense to everybody. So, long-winded answer, a lot of psychology in there, but Pepper, love it. Let's see. Margaret says Pepper should track her P&L over a long time and see if placing many trades a day is truly working. Yeah, I think that would certainly help. And I think I think you shouldn't put the pressure on yourself to make 1 or 10 trades, right? If it looks good to you, I think that you should take it. The key is, and I agree with Margaret, is going back through and evaluating. And not only, is it working, but which pieces of it are working, right? It's easy for us to lump at the whole structure at our end balance and say, oh, great, it's been 3 months and I'm making money. That's fine. I mean, obviously that's the end goal. But if I can go back through and say, okay, what happened this week? Let me break down these trades or on each trade and say, what could I have done to make this better? Was my stop loss too tight? Was my profit targets off? Did I have inappropriate share size? when we can evaluate that, if I can just increase the probability of success a little bit, 1%, 0.5%, 0.25% on every trade, at some point you start to get better, you get more confident, and all of a sudden you start to feel better about it. You won't ever think about overtrading, and you won't be too scared to take any trade because you know your discipline is rock solid. And that, to me, was the most challenging piece to me, is accepting the fact I'm going to lose sometimes. So what? It's a numbers game, right? In a weird way, I'm the master of just crude, horrible examples, but I used to work with a guy. He was a sales guy, so he was extremely aggressive, and he would go up. I couldn't even be around the guy because it was embarrassing, but he would go to clubs, and he would walk up to a woman, and he would basically just say, "Do you want to go home and sleep with me?" And I was like, "Dude, what are you doing? Are you kidding me?" And he goes, "I'll ask it to, 50 women, and at least one will say yes." I'm like, "What? How crazy is that?" Well, for him, it's a law of averages. I'm going to do well over time if I just keep on asking and asking and asking. Now, I know that's a horrible analogy, but the point is you have to keep trading, and you have to learn from every trade that you make, and you get better, and you get better and better, and then your end goal is reached, right? Which is ideally, at least for me anyway, it's to have a life derived from, not a life derived, but the lifestyle that trading and investing can afford you. So it's all about the psychological aspect of your mind. So I love your question, Pepper. It's awesome. Hey, Joe, thank you so much. And I love your picture, by the way. Thank you so much, Joe. I really do appreciate that. And cheers to you, my friend. Have a fantastic weekend. All right, let me see what I got here. Put in your trade plan what you're comfortable with. Yeah, and right, it's about experience too. When you're starting out, you don't know what you're comfortable with. Matter of fact, most people are so uncomfortable when they start, it's challenging. Let's see. I prefer always having more than one trade active because having just one makes me obsessed with it. Yeah, I agree. Right? Spread it around a little bit, but don't force it. Right? There might be times where I could have dozens of trades on at one time, but all of them are going to be protected to some extent. Ryan, what does he say? The key is to be comfortable with the position size of your trades. Yes, 100%. As long as you can accept the worst case scenario without getting emotional, then you can keep on trading. Totally. I will tell you, there's been times where I've been trading and my hand's just going like this. It's just shaking, and I'm sweating bullets. And not anymore. I mean, I'm calm with it now. It's funny because there'd be days I could be down $50,000 in a day, and you wouldn't know it. You learn to control your emotions. You learn to just, enjoy the profession, if you will. Obviously, I haven't had the last time I had over a $50,000 loss was last year with you guys. You guys got to see that one, and I was fine, right? I was fine. All right, let's see. What did Walter say? Yep. Let's see. Cool. So let's go through here. Sorry, GD. I couldn't help myself. It was actually horrible to be around that guy. It was really terrible. All right, let me go to one more here. And this is actually, we're changing completely our talk track. But let's go to Coinbase Pro. I'm hoping I'll have to sign in again. And we'll just kind of look at this one. So, obviously the core strategy is built off of the ability to see institutional buying and selling, basically looking and seeing where are they lining up, right? Where can I see potential turning points in the market based off of big buyers and sellers, the big ones. So one nice thing about crypto is this right here. This is Coinbase Pro, and the question came from Rob, and here's the question real quick. He says, I'm guessing it has something to do with the balance of the steepness of the green and red slopes, and this gives us a clue as to whether there's a bias for the market at that time. And what he's referring to is this right here. It's really called a depth chart, and depending on which cryptocurrency you're trading or which asset, because this is for equities as well, but predominantly it's going to be in the crypto space. This is a very popular tool. What you have on the left-hand side of this little gray line, that's the market price, right? The left-hand side is all your buyers. The right-hand side is all your sellers. So you can start to see a couple different important pieces of information. The first one is how much can you buy and where would you move price up to? So let me see if I can zoom in here. So you can see right now, if I wanted to buy 26 Bitcoin, which would be crazy for me to buy 26 Bitcoin, that's millions. But you can see where my cursor is. There's a little number there. It says 28, 26. It says buy. It'll tell me how much, and I would move the order book up that far, if that makes sense. So it's moving a little bit quick, so it's hard for me to do the example. But basically, if I wanted to buy roughly at 62,000, it would cost me about $1.7 million, and I could buy about 26 Bitcoin. So this mountain chart here really just says, where would you move prices to if you were to buy something or if you were to sell something? So if I was to sell, let's say, $5 million, I can't even get that far. Let's try to see what happens if I sell 5 million. 5 million would be right about here. So if I sold $5 million worth of Bitcoin, I would drop the price of Bitcoin on Coinbase to $61,300. So it's nice to see the actual volume there. The other thing, and really the main reason I use it, is for walls. So if you notice here, it's cumulative. So the more buyers that jump on here, the steeper this will become. And you can see right here, right at 51,525, there's like a big step up. And there's one over here for sellers as well. That tells you that there's an abundance of buyers or sellers at that point. Now, if I can line that up with a price chart, it's basically saying this is supply and demand. I mean, look at this stack right here. It goes from 37 Bitcoin all the way up to 67. So there's 32 Bitcoin more right here as an order, meaning somebody is unloading a pretty big chunk of Bitcoin at that price. So if I'm looking for a buy point, well, for me right now, a buy point would in theory be somewhere right around 51,525, right? So we could go out here and we could reduce this chart a little bit. So we go to 5 minutes and we go to 51,525, which conveniently is kind of right at this turning point we see, right? So that's, Rob, that's kind of how you would use it. And it's just saying, I can see buyers and sellers. The question I have for Coinbase and others, which I don't know the answer to, is the numbers that we see, are those true? So for example, when you look at Nasdaq, for example, you're looking at level 2 screen. If you see 100 shares there, it's not 100 shares. It might be 100 shares. It could be 10,000 shares. It could be 300 million shares. You don't know, because they have reserve orders or iceberg orders that allow people to display a certain amount and hide. I'm not sure if they can do that with Coinbase. I know that I can't, right? There's no way for me to go out here and say, I'd like to buy, $100,000 worth of Bitcoin, right? There's $100,000 worth of Bitcoin, and that's $100,000 worth of Bitcoin. I can't hide it. It's going to just show up automatically, right? But I think maybe if you have an institutional platform, because there is an institutional side of this, I think it's called prime.coinbase.com, I think. I think this is their, it's the institutional side of Coinbase. So if you're an institution, you might be able to use reserve orders and hide orders. I don't know. I'd have to dig deeper into it, but you probably can. There kind of makes no sense as to why they wouldn't have that reserve feature for big fish, for their whales, if you will. But right now, you kind of take it at face value that this may potentially be supply zones coming up here, and you can see them visually, and demand zones. And where this helps is if I already see a demand zone on the price chart and then it lines up with the big block, it just increases my confidence in that trade at that level. Hopefully that helps, Rob. Merlin, do you think there's any truth to the 85% of Bitcoin being hodl, so less than 3,000 or so of Bitcoin liquid? I believe there is truth to that. I don't know if it's 85%, but I did this with my Crypto Investor Live guys on Thursday morning, and it's like, look, if you look at the Bitcoin ecosystem or Bitcoin universe, the maximum there will ever be is 21 million. We all know that. Let me go here, because the number, I'm curious when it jumps to 19. It has been 18 million for quite some time. Right now, still, there's 18.8 million in circulation right now, which means we've got 2.2 million left to be created, to be mined. Okay, great. So out of that 18 million, how many have been lost, right? And that's easy. 1 second, I'll bring it up here. Largest Bitcoin addresses. So you can go here, and the theory is that if something has been inactive and has not moved for over 4 years or 5 years, that it's lost, right? So what we click here is top dormant addresses for 5 years. So right now you can see there's roughly 4 million Bitcoin stuck in wallets that has not moved for over 5 years. So let's do the math. We now have 18.8 million. And let's just say, we'll round up a little bit, let's call it 5 million of those have not moved, which pretty much means that they're lost, right? That gives you 13.8 million. Now, I can tell you this, my Bitcoin are not for sale. I mean, you could buy my Bitcoin from me, but it's not going to be for $61,000. I mean, I will probably sell it to you for $500,000 if you wanted it, right? So, to me, the importance here is there's a lot of people out there. And is it 85% are hodls and not for sale? I don't know. I would say at least 50%, because everybody I know is saying I'm holding. So let's just do half, just to be conservative. And it will say it's 14 million are in circulation right now, including the ones that have been lost. So that means that 7 million are actually out there for people to buy. Even with that low number, you know, you have so many new people coming on with the Bitcoin ETFs, and you have all these different things and global acceptance, and you have El Salvador and Ukraine, and you're going to have hopefully Brazil here at some point, other countries. What does that do to overall demand? If supply is consistently shrinking and demand is exponentially rising, where do you think prices are going to go? I mean, that's been my talking track for forever on Bitcoin. I mean, I did it when we first started the show a year and a half ago. I did, why Bitcoin will be $100,000 by the end of next year. And honestly, the way it's moving, it might be 100,000 by the end of this year if the Bitcoin ETFs come up and we actually have a physical backed ETF. So I think that there's a lot more upside. But yes, Big Ab, I think there is truth to the fact that you look at Michael Saylor, right? Who's got, I don't know how many hundreds of thousands, but he's got, let's see if we can find out Michael Saylor Bitcoin. One second, I know I'm typing on the show. So Michael Saylor's Bitcoin holdings right now, and of course you have to trust but verify, has purchased an additional 5,000 Bitcoins. So right now he has, as of September 13th, $5.1 billion worth of Bitcoin. I think his holdings, like 90,000 or something? Oh, go away. I don't want to read you. I wish it would show his overall holdings. It doesn't, and unfortunately this is going to keep popping up. But the point is, this guy has so much of it. Is he selling it all? No, he's not selling it all. He is keeping those cryptos. He is not going to sell his Bitcoin at all. So, those are outside of circulation now, aren't they? And I think there's a lot of people out there like me. I'm in Big Eb. I think I could speak for you as well. You're not selling yours, are you? Right? I'm sure Brendan, he's not selling his. Tom, you're probably not selling yours if you got some. I mean, I know most of you are going to, it's a hold. This is a long-term hold for a few years. At some point I'll sell, right? But not right now. So yes, I do agree with you. I think maybe not 85%, but 60, 70% is buy and hold people that are going to sell under no circumstances. Love it. All right, cool. Exactly. Hell no, I ain't selling, right? Cheers to that. I thought I actually had more. I looked at my total yesterday. I had 5.007 Bitcoin, which is kind of disappointing. I thought I had more than that, but I guess 5 is better than none, right? Okay. Wow, we're cruising. Almost time up. What else do you guys want me to talk about? I didn't look at. I didn't have time to take screenshots of the earnings calendar, but it is important. So this week, if you looked at the companies that reported earnings, there were some substantial ones. I think it was actually pretty interesting seeing the financial firms pretty much all coming through with big earnings beats. Some of their price charts didn't exactly respond the way I thought they would. Let me bring up some price charts here. And if you have questions, type them in. I will get to those in just a sec. Let's go to Wednesday, right? So Wednesday, you had JP Morgan. So JP Morgan had a blowout earnings. And you can see that their week has been a little rough. 1, 2, 3, 4, 5. So they started off Monday horribly. Tuesday was really ugly. Wednesday, they reported earnings, and it didn't fare well that day, but it's since ripped up. Why not? Why did it rip up? Because they beat earnings. They ripped through it. Delta Airlines as well, DAL. They reported earnings. They got beat down on Wednesday and kind of bounced back a little bit, but still looking rather ugly. The financials are the ones that really were important for me. BlackRock, BLK, was another one that beat earnings by about 15%. And you notice they're popping. And I think that this was the start of the rally we saw. Now you move from Wednesday to Thursday, and now you start to see some bigger names. Bank of America reported earnings. They beat by almost 20%. Boom. BAC ripping to the upside. Citigroup as well. They beat earnings by 30%. Now, they're not getting as exciting of a move as you're seeing for some of the other ones, but still a nice pop up here. Wells Fargo, right? We should all be going, boo, boo, Wells Fargo. They ripped today. Now, of course, they reported on Thursday, which was an ugly day, but today, just market sympathy, they ripped up to the upside. You had Morgan Stanley report. Morgan Stanley beat earnings by 20%. Everybody beat earnings except Progressive. And notice where Morgan Stanley is today. So I think this sets the stage for a pretty impressive earnings season start. Now, what does it do to expectations? Well, here's Goldman Sachs, who reported today. They beat earnings by 52%, man. Monster beat. Charles Schwab, SCHW. Charles Schwab, they beat earnings not by a ton, 5%, but a big up day for Charles Schwab today, up almost 3.5%. You look at what's happening next week. There are quite a few companies reporting earnings. Now on Monday, if we look at the earnings calendar, it's not that exciting. It's not really exciting. So the 18th, you got Steel Dynamics and State Street. That's pretty much it. Later on in the week, we do have Tesla reporting. You have a couple other big names, Netflix as well. So that will be exciting to see happen next week. And to me, that's the real exciting piece for next week. I have a quarter of Bitcoin and climbing. Good. You know, get that Bitcoin credit card so you're getting paid in Bitcoin. It's funny because I've been using my Bitcoin credit card for almost every purchase I make. And people are like, well, you're not really getting anything. I'm getting Bitcoin. And now Bitcoin's gone from 30,000 to 60,000. So my rewards have doubled. I've already doubled my rewards. It's great. What else do we have? Outlook on indexes going into next week. Probably miss it. Adam, overall, I can't help but to not be bullish. You know, look at our daily chart here. So let's go to the Nasdaq. Right? You had a really strong finish to the week. Granted, we are coming up into supply. To me, this is it's one of those transition moments. It's like, I don't know whether we're going higher or lower here with the Nasdaq. Nasdaq's coming into some supply around 15,300. You know, that's a pretty decent supply zone. And we're ripping into it. Well, the question is, if we hold at 56.3 from a supply perspective, all right, we may continue this downtrend. I'll tell you what, if it breaks below 14.3, I will be building a bigger position short. You know, it just seems to have indecision right now. Now you look at some other indexes like the S&P. This one is at supply right now. I mean, we're double tapping supply, but it still looks strong, right? The overwhelming data out there would suggest the Fed's not going to back off their stimulus. The government's going to keep pumping money into the markets, and you know, la-di-da, everybody's happy. Let's make more money. So to me, it feels like we're going to challenge all-time highs next week. Russell 2000 is not doing anything, right? Russell 2000 is like the stoner on your couch that won't leave. It just sits there and does nothing. Well, I don't see that changing. Crude oil, you know, right now the momentum this is the hottest ticket in town next to Bitcoin. It is just ripping through these highs. Again, you know, 92 becomes the next major target here for crude oil for me. Gold, you know, until gold breaks through that downward trend line, I just don't see parking your money there. And then Bitcoin, I think Bitcoin's going to break the all-time highs here this weekend. I think when we talk on Monday morning, we'll be at 68,000, maybe 70,000. I know it sounds very lofty, but you know, when these ETFs roll out, the future will be there will be one that is backed by Bitcoin, and I think that's going to be a real big pop to the upside. Medic says, which credit card? I use the BlockFi credit card. There's also another one from Crypto.com, which pays you in their native token, which is kind of cool as well. All right, good. I hope you're a whole Bitcoiner at some point, Chris. Make it happen. It's funny that Bitcoin market cap is more than twice JP Morgan. Yeah, right? Well, here's the interesting part. If you think about what JP Morgan does, they take people's assets and they make more money with it. If you look at what Bitcoin does, that allows everyone to take their assets and make more money with it. And it's, you know, most of us are in the U.S., so you think of it from a U.S.-centric perspective. I know we have a bunch of Canadians as well. You think of it from a Canadian perspective. But if you look at a currency like Bitcoin, I think it's a currency personally, from a global impact perspective, there's billions of people this is going to be impacting. And the more of them they're using Bitcoin, you know, the more dependent that ecosystem becomes. And I think the future is pretty bright. What is the name of the Bitcoin credit card? So the one I have is BlockFi. Now, I will tell you this. I'm not a huge fan of BlockFi itself. So the reason is BlockFi, who is this one right here, they have a credit card. They used to pay you to keep your cryptocurrency there, but they've recently just dropped those levels so low. They're almost nothing, right? Earning so right here. So I'll click on this, and it's a teaser. You can see here, they're like, oh, you'll make 8%. Really? Well, let me go see if I can find their rates for you, just to show you. Show me your rates, buddies. Not they must have hit them. It used to be right here. It said, show me the rates. Interesting. They decided to move away from that. Open your account, no hidden fees. Where's your interest rate accounts? Oh, wow, they took it down. Convenient, our rates. So notice, they're paying 4.5% for you to keep your Bitcoin there. Yeah, but look at it. It's up to 0.1 Bitcoin. No offense to those who only have 0.1 Bitcoin, but why would I want to keep anything above 0.1? Because they're only going to pay you 1% up to 0.35 Bitcoin. Anything above 0.35 Bitcoin, they pay you 0.1%. That's the same as my bank account. It's not worth it. But their credit card is, let's go products. I think you can see here, crypto-backed loans, credit card. It's cool. It's a black card like that. It looks exactly like that. And you get 1.5% unlimited back on every purchase that you make. So there you go. Crypto.com has one as well. I don't have this one. They have a lot more that they will offer you with their credit card. Let me see if I can show you if they give me that one. Products, getting started, DeFi, grow, spend, Crypto.com. Metal Visa cards. Ooh. So there's their Visa card. Really cool. Metal. I like that. The only card you need. They give you all kinds of different levels. So most of you probably start off with the lowest package. You know, it's this one here. You only get 1%. But you notice they pay you in their native token, which is CRO, which is the Crypto.com token. So you'll notice that the more you have, the better rates of return that you get. So for example, if you don't have any CRO tokens, you get 1% interest. If you have $400 worth of CRO tokens, you get 2%. If you have 400,000, you make 8% reward in tokens. So kind of cool. Sam, it is a credit card. These are Visa-backed credit cards. Both of them, Coinbase, or sorry, Coinbase, BlockFi and Crypto.com are Visa-backed credit cards. All right, now just for the sake of Big Ab not winning today, I have to wrap up the show in the next 2 minutes, so I guess that's going to do it. What is the reason that they want to keep you want to keep your Bitcoin with them? The only reason I was keeping my Bitcoin with them because they were paying 6%. And then they dropped it to 5, and they dropped it to 3, and now it's not worth it. So I moved my Bitcoin to other locations, which pay me a lot more. Right now, I'm earning about 6% on my Bitcoin holdings in other places. So crypto earned on BlockFi stays in that account, or do you transfer it out? I keep it there. I just keep it there. There's no reason for me to move it out at this point. Because remember, I'm a buy and hold guy. So maybe next week I can show you. I can log in. It's kind of a pain in the butt for me to log in right now to BlockFi, but you could go in there and see your rewards and all that type of stuff, which I think is pretty cool. Let's see. Maybe I can just do that right now. Just to, I think I have to log in with my. Damn you, Big Ab! You're gonna make me go over an hour today. It's all your fault, Big Ab. Let's see. 1 sec. It's refreshing. So I moved almost everything out of my BlockFi account, but here you go. So I'll log in for you just so you guys can see it. GD says, so who will ever sell their Bitcoin when there's a practical use if there's little change of hands? Yeah, it's more likely art hanging on your wall. Kind of. You know, you can see where I moved all my last... Oh, no, this isn't it. Yeah, I moved out September 16th. You can see accrued interest, so I've made $12 in interest on the small portion of a Bitcoin I have there. But if I go to my accounts and go to credit card, you'll see, hopefully it doesn't show my numbers here, I've earned this reward with Bitcoin. So it's not a lot, right? It's 0.0008, and then I got 0.002, 0.001. So this is all Bitcoin coming back to me. So far, it's been $246 worth of Bitcoin. But again, Bitcoin has been rising and rising and rising. So, that's the Bitcoin piece. Any idea why Kraken does not provide profit loss statements? No, I don't know. I think that these exchanges are still learning. I think that what will happen is they're going to ultimately get professional departments to run these things, and then we get trading reports. But right now, they're not giving you all the data that you need to actually trade well, to get all your information. It's kind of weird. Which one is less likely to take our money and run? Both of these are legit, guys. BlockFi and Crypto.com have way too many financial backers. They're not going to take your... Well, I don't believe that they will take your money and run. I think that they will be, they'll be around. There are some shady ones, but generally is, yeah, cheers. Should we make an hour? I got about 2 seconds left, so apparently it's going to be an hour show. But yeah, there probably are some other credit cards that are out of Europe that I wouldn't quite trust, but, BlockFi's US, Crypto.com's US, it's fine. You'll be fine. All right, guys. Cheers. We made it 1 hour. I hope you all enjoyed today's show. Hopefully, we'll have some fun next week as well. Be careful out there over the weekend. Have some fun. Do something fun. Live your lives and enjoy yourselves. And cheers to everybody. I will see you guys on Monday. Take care.